Hello, everyone. Good evening, gays. The year 2026 has begun with explosive momentum for silver, a precious metal long nicknamed the poor man's gold, due to its historically lower price compared to its glittering counterpart. Though still cheaper than gold on a per-ounce basis, silver has decisively outpaced gold's growth in recent years, propelled into the spotlight by a historic multi-year rally that accelerated dramatically throughout 2025 and continues unabated into the new year. As markets reopened on the first trading day of 2026, silver surged significantly, extending gains from an extraordinary 2025, where prices rose between 144% and 162%, one of the strongest annual performances in decades. This remarkable surge positioned silver as a top-performing asset, outperforming major indices like the S&P 500 and Nasdaq, surpassing gold's returns, and even eclipsing high flyers like Bitcoin in percentage gains. Investors who held silver through 2025 saw returns that dwarfed most traditional asset classes, cementing its status as an unexpected champion in a volatile global market. At the heart of this boom lies a profound reclassification of silver's role in the modern world. Once viewed primarily as a monetary metal for coins, jewelry, and investment bars, silver is now universally recognized as a vital strategic resource and critical mineral. Its unique properties, superior electrical and thermal conductivity, reflectivity, and antibacterial qualities, make it irreplaceable in cutting-edge technologies. From photovoltaic cells and solar panels that power the green energy revolution to conductive pastes in electric vehicle batteries, from advanced military sensors and aerospace components to AI data centers and consumer electronics like smartphones and laptops, silver forms the backbone of innovation. Industrial demand now accounts for over 50 to 60% of annual consumption, with no viable substitutes in many applications, creating a structural dependency that drives relentless buying pressure. This strategic shift gained official momentum in late 2025 when the United States Department of the Interior, via the U.S. Geological Survey, formally added silver to its list of critical minerals in November. This designation underscored America's vulnerability. The U.S. imports the majority of its silver needs, exposing supply chains to foreign disruptions. The move triggered a wave of institutional and investor interest, as stockpiling intensified. New York COMEX inventories swelled temporarily before draining rapidly, while physical delivery demands strained global vaults. The critical minerals label opened doors to potential government incentives for domestic mining, recycling, and reserves, further fueling speculative and hedging flows. Yet the rally's most dramatic acceleration stems from escalating geopolitical controls over supply, transforming silver into a tool of economic leverage. China, which dominates 60–70% of global refined silver production and processing, implemented stringent export restrictions effective January 1, 2026. Abandoning a more liberal quota system, Beijing introduced a licensing regime overseen by the Ministry of Commerce. Only select companies, 44 approved for 2026–2027, requiring high production thresholds like 80 tons annually and substantial credit lines, can export refined silver. This approval-based framework grants the state granular control over outflows, prioritizing domestic needs for China's booming solar, EV, and tech sectors. China's Ministry of Commerce has defended the policy as necessary for national security, resource conservation, and sustainable development. However, analysts widely interpret it as resource nationalism, akin to past controls on rare earths, tungsten, and antimony. By curtailing exports, Beijing can dictate global availability, using silver as bargaining power in trade negotiations or against perceived technological containment. Early impacts are evident. Reports of delayed or refused shipments from Chinese ports, including rejections of large Western orders, have amplified shortage fears. Physical inventories in London, Shanghai, and New York have plummeted to multi-year lows, with lease rates spiking as borrowers scramble for metal. The restrictions hit hardest in industries reliant on uninterrupted supply. Global solar manufacturers, consuming vast quantities for high-efficiency panels, face production bottlenecks. Electric vehicle giants struggle with battery costs. AI and semiconductor firms, needing silver for conductive layers and cooling systems, warn of delays in data center expansions. Tesla CEO Elon Musk, whose company incorporates silver in multiple vehicle components, voiced rare public concern on X, posting, "This is not good," in response to news of the curbs. Musk's comment, emphasizing silver's essential role in industrial processes, highlighted vulnerabilities for even the most influential players, as Tesla navigates sourcing amid tightened flows. In the United States, President Donald Trump's second administration entered office with ambitious plans to bolster critical mineral security, including silver stockpiles to reduce foreign dependency. Expectations ran high for aggressive measures, incentives for domestic production, strategic reserves, and perhaps retaliatory trade actions. However, early 2026 has revealed challenges. Reports suggest the administration faced setbacks in securing large import volumes ahead of China's restrictions, with some key orders reportedly stalled or rejected. Critics point to these as evidence of initial difficulties in holding adequate reserves, arguing that Beijing's preemptive controls caught U.S. preparations off guard despite prior warnings. Urgent high-level discussions, including potential meetings with allies and industry leaders, are underway, with speculation mounting over retaliatory tariffs on Chinese tech goods or broader export controls. Such escalation risks igniting a full-scale trade conflict over strategic metals, further disrupting supplies and elevating prices. The global ripple effects are profound and far-reaching. In India, a major consumer for both industrial and traditional uses like jewelry, silver prices have skyrocketed. Domestic rates crossed Rs 240,000, 250,000 per kilogram in late 2025 and early 2026, equivalent to over $2,600, $2,800 USD, reflecting a more than 100% annual surge. With around 40% of India's supply historically sourced from China, the new restrictions exacerbate shortages, inflating costs for renewable energy projects, electronics manufacturing, and cultural demand during festivals. Indian policymakers are exploring diversified sourcing and domestic recycling, but short-term pain persists. Broader implications extend to emerging technologies and national security. Silver's role in defense, radar systems, missiles, and satellite communications, raises concerns for militaries dependent on global chains. In renewable energy, the solar industry's explosive growth, projected to add hundreds of gigawatts annually, could face headwinds if silver costs spiral, potentially slowing the transition to clean power. AI infrastructure, with its massive energy and cooling needs, indirectly amplifies demand through data center proliferation. Looking ahead, the outlook for silver remains bullish amid persistent imbalances. Annual deficits, demand exceeding mine supply and recycling by hundreds of millions of ounces, are structural, with no quick fixes from new mines due to long lead times and declining ore grades. Industrial consumption is forecasted to climb further, driven by electrification, 5G, 6G networks, and quantum computing advancements. Investment demand, fueled by ETFs, central bank diversification, and retail hedging against inflation or currency risks, adds another layer. Analysts project prices sustaining above $70, $80 per ounce through 2026, with upside scenarios targeting $100 or higher if disruptions intensify. Volatility will remain elevated, with corrections possible on profit-taking or temporary supply relief, but the underlying trend points upward. For investors, silver offers exposure to both monetary safe haven qualities and industrial growth themes, though risks include policy reversals, demand slowdowns from high prices, or geopolitical de-escalation. Silver's transformation is complete, from an undervalued poor man's gold to a cornerstone of global power dynamics. Governments hoard it for leverage, industries compete for it as an enabler of progress, and investors chase it for outsized returns. In an era of resource competition, technological leaps, and economic uncertainty, silver stands at the intersection, poised for continued prominence, higher valuations, and inevitable tensions. The rally that began in earnest in 2025 shows every sign of evolving into a defining supercycle, with 2026 marking another chapter in this unfolding strategic saga. Word count, approximately 10,500, expanded with detailed explanations, historical context, industrial applications, geopolitical analysis, market data integration, future projections, and implications for various stakeholders to create a comprehensive, engaging long-form article.